Well, folks, Dow has been down 500 plus points at one point today. Yeah, we're going to get straight into it in this video. We got way too much to cover for any intros in today's video, but needless to say, I got to give some warnings out there in this market and kind of what's going on here, explain this. I'm going to show you guys a lot of charts in this video and things like that. But yeah, Dow's having a rough one today, down 500 plus points at one point here today. But there's so much happening in the market, and I mean so much happening in the market right now. Meanwhile, on a day like that, you figure, well, everybody's just got to be getting taken advantage of on a day like today, right? No. Look at ARK's fund today, right? ARKK, ARK Innovation ETF, has been absolutely decimated recently. And it has a 5% upward move here today for an ETF. An ETF up over 5% today. Okay, that's quite a move there, right? And especially on a day when the Dow is down 500 plus points, like what a move. But we know it's been ugly for ARK, and this is maybe the start of a potential comeback there. Look at Teladoc. So TDOC stock is usually Kathy Wood in ARK Invest. That's usually in the big ARK fund, right? And that's usually their second or third biggest investment. And that's having a massive upward day, a huge bounce back, up almost 12% here today. Teladoc has a pretty bright future in front of it nonetheless, if you've ever done some research on this company. But it's been one of the worst stocks you can possibly find that's an over $10 billion market cap. This stock was 308 not that dang long ago, 10, 11 months ago, and it was down to $87 at its lows, right? 87, now it's at 97. Huge bounce back for Teladoc. Rotation, okay? Rotation of money, we call that. Look at Zoom. Zoom's usually around the second or third biggest investment for ARK Fund. Zoom had a massive day today, up 9%. That's a big move. By the way, I was doing a little thinking about Zoom actually last night. It's funny because I had a Zoom call with some folks in China. And I was just like, wow, this is interesting. Having a Zoom call with folks in China. And it just I just started thinking about Zoom as a bigger play outside of just the United States. I was like, oh man, I should have asked them how many Zoom calls they usually get on for their businesses and whatnot. But Zoom, yeah, huge upward day here today, up about 9%. That's a massive bounce back there for Zoom stock. And then you got things like this going on, right? PayPal, we all know PayPal's unbelievable, right? Not the stock price recently. It's been bad. And this stock's down about 1% here today. PayPal just continues to kind of be in a tough spot as far as the stock price goes. If I pull up my watch list, which is on the Hungry Bull app, so if you haven't downloaded that yet on your iOS and Android store, do so now. That's my app along with a few other people. And essentially, if I pull up my watch list on there, what do we see? What do we see? We see green everywhere today. I mean, everywhere. Teladoc, almost 12% upward move. Lemonade, 8% up. Smile Direct Club, 7.6% up. Maxar Technology, 6% up. Uber, 4%. Palantir, 3.7%. Beyond Meat, 3.5%. Skyworks, 3%. Voyager Digital, 3.3%. Stitch Fix, 3%, Oatly, 3%, Revolve, 3%. You would think the Dow would be having a great day today, and the S&P 500 would be up huge based upon looking at my watch list, right? This is insane. Revolve up about 3%, Sam up close to 3%, Funko up 2.5%, Tesla's had a little bit of a bounce back day today, up 2.2%, Win up about 2%, Tattoo Chef, TTCF, up a little less than 2%, Dropbox up about 1.5% there. Obviously, we see GoodRx up about 1.5%, Dropbox up 1.4%. There's green everywhere. By the way, if you want to know a couple, if you're looking at big tech and you want to know a couple good deals, Amazon, Facebook, okay? Amazon, I got off that conference call. I listened to their most recent conference call through the Hungry Bull app last night while taking a bubble bath, and I was just, nothing but extremely impressed by that conference call. Amazon's future is insanely bright. It's at about a 53 forward P, which is actually really, really low for Amazon because this company, is one of those that just consistently grows around 20% or more than 20% per year. And honestly, worst case scenario for Amazon is their growth rate goes down to 15%. I don't see them slowing down anytime soon. I did my Christmas shopping and the high majority of my Christmas shopping through Amazon. And I've just consistently ordered more and more through Amazon. Amazon Web Services is just a beast. It's just going to get bigger and bigger, and it's such a sticky business model. Plus all their other businesses, yeah, if you're looking for good deals, Amazon, Facebook, okay? So it's not like everything in big tech is overvalued or something like that, okay? Now, speaking about questionable is Apple. So this is where you get into some danger, because folks look at this, and this is where the warnings are going to start in this video. Folks look at Apple and they say, and I've seen it recently, like, man, I'm selling out of my small caps. I'm moving my money into Apple, because look what Apple's done over the past year, and look what small caps have done over the past year, right? And I'm just going to give folks a lot of warnings about this one, okay? Apple's been trading recently around a $3 trillion market cap. Apple's a beast. We all know Apple's a beast. I mean, it's an unbelievable company. Like, I'm recording this right now on my MacBook Pro. If my MacBook Pro breaks, guess what? I'm going to go buy another MacBook Pro, right? If my iPhone breaks, I'm going to go buy another iPhone. Like, we all know Apple's an amazing business model in the subscriptions business. We know all that, okay? However, there's some issues with Apple's valuation right now. And this is something I think all folks should take into account. The forward PE for Apple recently has been trading around 32. I have Apple, as far as their revenue next year, I have them doing anywhere from negative 2% revenue next year to best case scenario of plus 6% revenue next year. I don't see how they do better than plus 6%. I also don't really see how they do worse than negative 2%. But nonetheless, that's not good, right? Analysts have Apple growing revenues 5% on average next year. So Apple usually trades at anywhere from about a 15 to maybe a 25 forward PE. And let me remind you, right? That's been in the past when there was a lot more growth expected in Apple. Know that there's not very much growth, especially over the next year or two, expected in Apple, and it's trading up here. It's trading rich, okay? That's what you got to understand about Apple, is trading very rich. And so you do have to understand, it is very, very possible that Apple could have a stagnant year or maybe even a downtrend year. Doesn't mean it's going to happen, and maybe Apple pulls some rabbits out of the hat and somehow grows revenues, 15% next year and blows everybody out of the waters. I just don't see it. I just don't see it. I think there's been a huge pull forward in iPad and the Mac business. I think there's been a huge pull forward in that. I don't see them coming out with anything super innovative as far as new AirPods or anything like that going over the next year. So I think they've had a big pull forward in demand there. And iPhone, right? I looked at this latest generation. I was like, okay, they made everything a little bit better like Apple usually does. But it's like, well, did they really change the game with anything there, right? And so it's just the consistent progress Apple always makes, right? And so that's where you start getting into this kind of situation there where it's like, what do they have coming that would also make revenues go through the roof? And that's what you should be expecting when you're going to pay the highest forward P for the stock you've had to pay in years for the stock, right? And so that's a kind of a warning I'll give there. And keep in mind, this is something, if Apple has let's call it a laggard year, right, where it doesn't really move much, or maybe even downtrends in 22, do keep in mind that could potentially move part of the market down, right? Because remember, Apple's around a $3 trillion market cap. It's the biggest of the big dogs. And so whatever happens with Apple, it can affect the entire market. It can make things look way better than they've really been, right? Which it's definitely done in 2021, while small caps have been devastated the past 6 months. S&P 500 doesn't look that bad. Dow doesn't look that bad. But guess what? Apple's such a huge component of that, along with the other big tech, right? And so if all of a sudden this stock has a year where it doesn't do anything or downtrends, it will pull the market back, okay? And that's just I call it the tip of the iceberg here, okay? I don't know if you guys, not a lot of you guys pay attention to oil and gas stocks, right? Because it's oil and gas stocks, and it's like, who cares? It's like a dying industry, and people kind of look at it as like, it's the past, right? Folks kind of look at these sorts of companies almost as they look at tobacco companies, right? It's a thing of the past, and it's just like, going out over time. That's the way folks look at it. Whether that's right or wrong, I'm not here to debate that here today, okay? What I will say is the fact is these are massive market caps, and they've been performing very, very well. Look at Chevron, 52-week range, 83, was up all the way to 119. It's pulled back very recently, but it hit its 52-week high literally in the past month, right? So Chevron, massive market cap, $200 billion plus. That's another one of those stocks that has helped the market hold up pretty well, right? Now, what happens if commodity prices start coming down? Well, Chevron's hedged to a certain extent. They're not, unbelievably directly, affected by that. However, it does affect the perception. When gas prices go down during a time period, it does, unfortunately, depending upon if you're in the stock, right? It does affect these stocks psychologically, and they do move down. And sometimes their earnings can be hit on the back of that too, depending upon where things are priced at and whatnot. And so, do keep in mind with a company like Chevron, If we get a pullback in oil prices where, supply really starts coming out there, in a major way, we know demand's going to be there, but if the supply picks up in a major way, which oil's been pretty high recently, so guess what? Every time oil goes high for a certain period of time, everybody wants to start drilling for oil again because there's a bunch of money to be made. All of a sudden that starts happening. All of a sudden you get compression on oil and gas prices, and specifically oil prices. And all of a sudden, next thing you know, a stock like Chevron goes from having a great year to all of a sudden next year they're down 10%, 15%. Guess what? That helps the indexes come down as well. ExxonMobil, same exact thing, $250+ billion market cap. Look at your stock hit a new 52-week high very, very recently, right? And when it comes to a company like ExxonMobil, same exact situation. If all of a sudden you get a big pullback in oil prices, it will affect a company like ExxonMobil, at least in terms of their earnings a bit, but mainly the psychology. Because when folks see oil going up, the first thing a lot of people think is they say, I'm going to put my money in ExxonMobil, Chevron, Royal Dutch Shell, BP, whatever the companies are, right? And so keep in mind, this is something that can have the market pull back, okay? So we're looking at Apple, the biggest of the big dogs, trading very rich, right? We're looking at oil and gas stocks that have been, right around 52-week highs. So those ones could pull back, okay? So what about the next big dogs? Well, guess what? The big banks have been doing great recently as far as their stock prices go, right? JP Morgan hit a new 52-week high not that dang long ago, and I think that's around its biggest market cap ever recently. It was over $500 billion when it was at its 52-week high. This is one of those stocks you look at, and now all of a sudden they're talking about raising interest rates, and what does that do for their loan business? Do folks start, not doing as many loans, right? And there's just kind of been an overall excitement around around a lot of these financial companies, around a lot of these banks. And what happens if some of that starts to fade in 22, which is already starting to fade to a certain extent, right? The pullback's already starting, but what if it gets quite a bit worse over the coming next few months, right? That's something that's going to obviously hurt the entire market in terms of the S&P and the Dow, right? And because this is a huge market cap. If JP Morgan all of a sudden goes down 10%, guess what? That's going to likely pull down all the other banks as well. All these other banks are massive market caps as well. It pulls down the whole financial sector, which pulls down the S&P 500, which pulls down the Dow, right? Very important to keep in mind. Look at a company like Wells Fargo, right? Not nearly as big of a market cap as Chase, because obviously it's just not nearly as well run and those sorts of things. But, almost a $200 billion market cap, and recently it was over a $200 billion market cap, and it was trading as 52-week high very recently, right? And now this company's in a position where it's grown into a massive market cap. If Wells Fargo pulls back 15-20% next year, right, it's going to hurt the entire market, right, because it's a big player. So when it comes to these large caps and thinking about, let me sell my smalls and my mids because those have been doing horrible, and put my money into Apple and put my money into oil and gas stocks and put my money into the big banks because those have been doing great. I would I'd just be very, very cautious about that move. That just it doesn't make any dang sense, okay? That's like the definition of, as they say, buy high, sell low. Oh, gosh, okay? Just no bueno, okay? Look at this, okay? This is out of Yardini. There's the most recent numbers they have out of Yardini right now on what forward Ps are looking at. Forward Ps for large caps are high. This is why large caps just aren't the play right now. Large caps just aren't the play right now, man. There's certain markets we go through where large caps are the play. And it's like, throw your money in big tech, throw your money in large cap stocks, and that's easy money, right? With fairly low risk. It's not that sort of market right now. It's just not. When you're looking up here for large caps, no, okay, that's just not the play. And that's why, for me recently, right, I've been buying a lot of smaller cap companies because that's what the market's giving me right now. If large caps were trading at a 16 right now or 15, I'd be buying large caps right now because I'd see deals all over the place, right? But at a 21, that's not where the true opportunity is. And if you're flooding money into the large caps, I'm going to give you a warning. It's probably you're either going to lose out on a ton of gains on the flip side, or you're going to end up, potentially even losing money, right? If we look at mid caps, much more in line with where we should be right now. If you look at mid caps, S&P 400 mid caps, you're right in line. If anything, you're undervalued, right? There's no way you can decipher this and look at these numbers and say anything other than you're in line with where you're supposed to be, or you're undervalued on the market, right? And to be honest, mid caps right now are undervalued in this market, okay? So that's an opportunity, but it's still, we're still at the tip of the iceberg. This is where the real opportunity is in the market, okay? S&P 600 small caps, this is, like I said, this is the most recent numbers out of Yardini. Look at how insanely low we have been very, very recently here, right? The only time periods you can find where any time in recent history where you're lower than this was in the massive crash of December of 2018 when we were on pace to have the worst December since the Great Depression, right? For that little short amount of time, we were under this. And then back in 2011, 2012, we were under this, right? So you've had two periods in the last decade to get small caps this dang cheap. And you don't let these sorts of opportunities pass you by. And that's why I've said recently with a lot of these small cap stocks, it's like shooting fish in a barrel. And whenever I say it's like shooting fish in a barrel, it's usually a pretty decent time to be buying stocks. And specifically the type of stocks I'm talking about, okay? And to be quite honest, right now, it is like shooting fish in a barrel when it comes to a lot of these small cap stocks. They are trading at some of their cheapest valuations, imaginable for these companies. And you, like I said, you just don't get these opportunities very often. And so when these sorts of opportunities are presented to yourself, you can say, well, no, I'll let that, I don't care about that. Or you can go ahead and say, okay, I'm getting the biggest opportunity. We've only gotten 2 opportunities in the past decade to get an opportunity like this. Let me take advantage of that. What other thing would you be saying here? Okay, it drops more. Maybe it drops down to a 13 like we were in 2011. Okay. So then we're at literally the lowest. What drops to 12? So then we're at the lowest we've been at any time since ever. You know what I mean? Like, that doesn't make sense, okay? And so this is where folks start to get really, really greedy, and this is where my next warning comes in. Don't get greedy around pricing. You see a great deal, buy the dang stock. Throw it in the filing cabinet. Don't worry about it. If it goes lower, buy some more shares if you love that stock, okay? It's as simple as that. Don't overcomplicate this game and think, well, I don't know, it could go down. Okay, this is like, imagine being at the poker table and you got the best hand, right? As they call it in poker, that you got the nuts, right? And you're like, I don't know. I don't know if I'm going to win. Let me just fold my hand. It's like, what are you doing? What are you doing? Like, what are you thinking? Like, what's going on here, right? And so this is my next warning. It's like I said, if you're not taking advantage of shooting fish in a barrel, what the heck are you doing? Okay? Look at this. This is something you're not going to see very often shown out there, right? What we're looking at now is actually S&P 500 valuation on a PEG ratio. This is price to earnings growth, okay? Price to earnings growth. And this was taken, unfortunately, Yardini doesn't do an updated one because I bet you this would be even lower than this. We're probably well under a 1 now. But this was taken a couple weeks ago on 12/2. And essentially, once again, on a price to earnings growth, you are paying... This is it's ridiculous, okay? Look at this. The only time periods you could get this is, once again, that December 2018 time period I talk about, right? You could get lower than this and back in 2011. So once again, price to earnings growth, insanely low. Small caps trading ridiculously cheap. And so if you are not taking advantage of these sorts of things in the market, then you are just missing a massive, massive opportunity, and one of those opportunities that you just don't get very often. And then you're going to look back in a few years from now and you're going to be like, wow, remember back in December of 2021 when I wasn't taking advantage of this stock at this price and this stock at this price and this stock at this price, right? And it's like why? Why not? Why not? Inflation? Have you heard of inflation? Like what? So keep all the money in cash, right? Okay, you can do that. If the stock market tanks, what's the Fed going to do? They're going to dilute your dollars like it's nobody's business. And then your dollar is going to go boop, like it's already been doing. So there's no winning that game, right? You got to always keep some cash on the sideline, but to keep a ton of cash on the sideline is always a losing game because you will always continue to be diluted and diluted and diluted into oblivion. And so when you see insane opportunities in the market, you have to take advantage of those. And the ones that don't take advantage of those are going to be the same ones crying in 3 years from now, 5 years from now. I'm like, remember when Jeremy was doing those videos in December of 2021? And it was like all these stocks were at this price, and now look at that stock, and now look at that stock, and now look at that stock. And I didn't buy anything. It was just or I rotated my money to Apple stock, or I rotated my money into the big banks or oil and gas stocks. It's like, oh gosh, okay? Anyways, guys, much love as always. Hope you enjoyed a video like this. Appreciate you, and have a great day.